Hello, traders. It's 8:01 a.m. on Wednesday, the 4th of September, 2019. This is episode number 1588. Thanks for joining me again here today. Another trading day. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk appetite has come back. Risk on. The leader of the pack is crude. Crude took a bit of a hit yesterday and has recovered much of it, trading at 55.31 on the October contract, up 2.5%, followed by the DAX. The DAX is up 1.15% on some good numbers out of the Eurozone. Euro stocks comes next. The laggard today is the Bund. The Bund is off 0.59% or a handle and 6 ticks. The usual suspects for safety in terms of safety assets are all down this morning. The news that's driving this, or at least what is likely driving the sentiment, is that there's a speculation, early speculation, that Hong Kong is to formally withdraw the extradition bill that has caused these historic riots in that city. And that's causing some people to ease off of safety and put some risk on. Also, major European PMI services showed signs of improvement but remain lackluster in expansion. In addition to that, UK Parliament took control of Brexit legislation from Prime Minister Johnson, meaning they could bring forward a bill seeking to delay the UK's exit date. That's a boon for the Eurozone as well, as there's a significant amount of instability there. So that's what we have. The S&Ps are trading in a gap up. We're back in Friday's range. And looking at the calendar and what's ahead, we did get U.S. Balance of trade this morning for July. Came in at negative 54 billion versus expected 53.5 billion. We have a slew of Fed speakers today. I'll go through those just so that we're all aware. At the open, we have Fed's Williams. We do have also we do have the Bank of Canada rate decision at 10 Eastern. And then we have ECB's Guindos speaking at 12:30 p.m. Eastern. And then the Fed parade starts with Fed's Bullard at 12:30, Fed's Bowman at 12:30. At 1 o'clock, we get Fed's Kashkari. And at 3:15 Eastern, we get Fed's Evans. And that's what's going on in the UK. We have this thing called the Ben Bill, and the vote is expected around 4 p.m. for those trading European products. So that's where we stand this morning. Seeing are folks having a hard time with the broadcast? Is it breaking up for you? If it is, just hit the refresh button on your browser. This is something that YouTube controls and not on my end. Let's take a look at what we expected yesterday versus what we got. Yesterday, we were opening in a gap right smack dab in the middle of this low volume node and gap area. And the expectation is that the market is likely to be responsive, initially at least. The primary scenario is the market is likely to push down and then get responsive, push into the range and fail out around the 29.14 area. The secondary scenario is an attempt higher and then sellers likely to come in and push us down. That scenario actually had a pretty good probability of materializing because of the type of action we got on Friday, where we gapped up and immediately sold off and became responsive. And the expectation on scenario 2 is to push down towards 28.72 or so. Neither one of these played out. The market yesterday was very lackluster. We did get the push up to 29.14. This key, the orange stock zone that you see here, 29.14, almost on the nose. And then sellers came in and we got this strong push down. It was, as I told the folks at Convergent Trading in our Trade Talk webinar yesterday, it was a tough one to read early on. And then once the impulse took place, things loosened up a little bit and it became tough to read again because essentially we had an impulse with a very minor continuation and then it just went completely sideways for the rest of the day. Note that yesterday our overnight stat, which says that historically, over a very large sample of days, like 10 years of days, trading days, historically, the overnight high or low is taken out approximately 98% of all days in the S&Ps in the minis. And yesterday was one of those days that fell into the 2% bucket. We were not able to take out the high, the initial balance high 29.1450, and we were not able to take out the initial balance low at 28.91, and just went sideways for the entire session. What does this say? This says that the market completed its business early on. Now, volume was really good yesterday, and based on the way that it traded, I said later in the session that with the way it's trading, it's really setting up for a big move, and that maybe today with the push here into a gap higher. But yesterday, pretty good coil, 1.24 million contracts traded in a day session. It's a little higher than what we would expect to have as common. And with it being completely balanced, notice that mid, which is this blue line, VWAP, which is this cyan line, it's like a light blue, and the point of control and the open, all in the same spot, all in the same spot. Just coil, 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 and there's a lot of volume in there with the delta remaining positive the entire session. If you look at the delta versus the zero line, which is right here, you'll notice that delta was positive the entire session on high volume. This is kind of winding up. This is like the pullback of the bow to shoot an arrow. It's kind of like compressing, compressing, compressing. So that's what we left behind yesterday. There was a good opportunity for sellers to actually step in and push through this 28.90 half high that we left behind and completely fill the gap zone. We left 2 ticks of this gap zone behind, but I removed the gap zone anyway because let's not be too picky. But there was a pretty good opportunity for a pullback and then a continuation, and that really would have pushed the market lower in short order, in my opinion. But the market does what it does, and what we have is a market that really wanted to rush up on the reopen. So here in the Asian session, we get this quick pop, and we continued in the overnight session here in the US to push higher. So throughout the Asian session, we've just been pushing this channel higher. It slowed down a little bit once Europe opened, but look at this profile, 3 distributions, 3 acceptance area, the point of control at the upper end of the range. Volume's pretty good, 338,000. 338,000, and overall it's not backing off of the high. It's just completely resting here. The expectation is it's likely to push this high once again. So what we have is a market that is really tackling last Friday's action. Let's take a quick look at ctbookmap.pro here. Here's what things looked like in yesterday's session. This, in a nutshell, is yesterday's session, and everything from here on out is considered the extended session or the overnight session for me. And the overnight session really unaided, just kind of pushed up. There wasn't much liquidity on the book, not much in terms of collisions and things like that. And what we have right now is a market that's a little on edge, in my opinion, in terms of how it's trading and how it's offering up. We have some relatively strong liquidity at 29.40, but that's a major strike. So is 29.45, not a major strike, but it's a strike. 29.45 as well. The prior week's highs around 29.42, and we're only 9-10 points away from that. So this looks to me quite bullish in the way it's shaped up. I do expect some reversion today, some pullback, but I really am looking for the market to squeeze shorts today. It's changed its temperament completely this morning. Let me look for my second sigma here. Second sigma. All right. So this morning, what is the expectation? I'm looking for yesterday that push up and response with a drop worked out okay. A little bit of pain, a little bit of heat, but it was behaving as expected. So this morning we're above the MC point of control of 29.2450. We're above the point of control left behind from Friday, which is also the point of control around the point of control of Thursday. So this 29.2350, 29.2450 area is really important. It's a big magnet, and we're in the low volume node from last Friday. So the template day is last Friday. The expectation this morning is an open that makes a small attempt lower, potentially to 24.50. I'm looking for an impulse higher, and I'm looking for it to push this 41.75 and make its way to 45, as mentioned last week, as was expected last Friday, and then to start driving towards 29.50 and 29.55 before it takes a break. That's scenario one. It is responsive to a small extent, but overall the action is expected to be initiative. And so I'm going to be looking for failure on the short side, on the sell side by sellers, and I'm going to look to step in and push longs, aiming for this 42 area and then 45 above. The secondary is an open that squeezes that overnight high on the overnight point of control being near highs, squeezes that overnight high, tests the 41.75, and then we get the same response potentially that we saw last Friday for a pushback to 24.50 and a potential tag of the 14 before it sits in the middle here. Given that it's a gap, scenario 3 and 4 are likely. Those are driving type of behaviors. I won't draw them on here, but those are an open test up and drive down, and then an open test responsive and drive up. If we see a drive of any kind, then I'm really looking for that 55 to be taken and for it to push through to 60 and then 65 and a quarter. On the upside, on the downside, I'm simply looking for it to push back to 2903, 2904 yet again. So that's where we stand this morning. Again, this is not to predict what the market will do. This is just to tell us that once we're in a position, we're testing the market against what we think might happen, not what we want to see happen, and then hop on and we have our targets, and we can just sit back and relax and let it do what it's got to do. Good luck today. I'll catch you tomorrow morning. Take care.